Good morning everyone, this is Amit Pabari, founder and managing director of CR Forex. In today's presentation, we are going to discuss how US economy is doing, impact on dollar index, 10-year US yield, and what is the outlook on dollar rupee pair. Now let me start with how US economy is doing. If you see the chart, US GDP is growing at the fastest pace in last 2 years. Quarter 3 posting was highest in 2 years. It grew by 4.3% versus 3.8%. The growth was resilient because of 3 reasons. Number 1, consumer spending. Number 2, trade dynamics, and continued and robust investment in AI related business. The second reason why we are expecting growth momentum will continue because of one big beautiful bill. We are expecting that close to 50 billion to 100 billion tax amount will be refunded to taxpayers. As a result, 0.2 to 0.4% of their annual income they will get in hand. Higher money in hand will increase the consumer spending, eventually will increase the growth in the US. 6 months back, entire market was expecting that inflation in US economy is going to rise because of tariff. But if we see the chart, the trade deficit has come lowest since 2009. And if you see the inflation data also, it is also under control and inflation is near 2.7%. And another important data which we must analyze is how is labor market in US is doing. If you see the chart, we are getting a early indication that labor market is getting stabilized and percentage of firm want to increase employment is also taken up. Overall, if we say that GDP is growing, expected to grow, inflation is under control, and labor market is also doing good. That is all in all a good sign for US economy. Now let us understand what impact it is going to have on 10-year US yield and dollar index. 10-year US yield, which is currently trading at 4.17, we are expecting it to move higher towards 4.5 kind of a level. As far as interest rate in US economy is concerned, we are not expecting Fed to cut interest rate aggressively in the year 2026, probably one rate cut in 2026 that will lead the 10-year yield to move higher towards 4.5%. Let us understand what impact it is going to have on dollar index. Dollar index has taken critical support near 96 to 97 kind of a level. Entire market is expecting that during Trump era, generally dollar gets weaker. Now, if we go back to history and if we see in his first term, the first year dollar was getting weaker. In the second year, dollar started moving higher. Will the history repeat? That only time will tell. But early indication is showing that 96 to 97 is going to act as a strong support for dollar index, and gradually it is likely to move towards 102.50 to 103 kind of a level. Now, if dollar is going to rise, what is going to happen in euro? Euro is facing couple of challenges. First challenge is geopolitical concern with respect to Russia, Denmark. Second problem is France fiscal deficit is increasing at the fastest pace. These are all factors which are going to keep pressure on euro. For euro, we are expecting that 1.18 to 1.19 is going to act as a strong resistance, and we are expecting that the pair is likely to move towards 1.14 to 1.12 kind of levels. Now let us discuss outlook on GBPUSD. UK economy is facing difficult times because of sluggish growth, fiscal stress, and Bank of England is going to decrease the interest rates as compared to other central bank, which is going to keep pressure on GBPUSD. For GBPUSD, we are expecting that strong resistance near 1.37 kind of a level, and ultimately it is likely to move towards 1.30 as a first target, and second target is 1.27. So let us conclude all the level. Dollar index, we are expecting it to move towards 102.50 to 103 kind of a level. Euro USD, we are expecting it to move towards 1.14 and 1.12 kind of a level. GBP USD, we are expecting it to move towards 1.30 to 1.27 kind of a level. And 10-year US yield, we are expecting it to move towards 4.5 kind of levels. Now let us discuss the outlook on Rupee. We are expecting that Rupee will continue to consolidate in a range. On 14th of Jan, there is a high probability that Indian bonds will be listed on Bloomberg Bond Index. If that happens, then we are expecting close to 20 to 25 billion dollars inflow in the Indian bond market. Expectation is that inflows will be spreaded in the year 2026. In addition to this, RBI is going to do buy sell swap close to $10 billion, as discussed in our previous videos also. And last month also, whenever RBI does that, generally it gives RBI a room to control the currency, and after buy sell swap, generally we have seen that the currency gets stronger. On the negative side, FII selling in Indian equity market, strengthening of dollar index, and higher crude oil price because of geopolitical tension can keep pressure on dollar rupee pair. In broader terms, 90.30 to 90.50 is going to act as a strong resistance for dollar rupee pair, where exporters should increase their hedge ratio. Meanwhile, 89.80 to 89.50 is going to act as a strong support for rupee, and where importers should increase their hedge ratio. With this, I will end my today's presentation. Jai Hind, Namaskar, फिर मिलेंगे next week. Thank you.